Hello, Professor. This is student Jignesh Chaudhary. As a part of the final project, this video is about to describe the simulation model to find a profitable online trading strategy. In this report, I have described the detail about what is the stock market, what is the online trading platforms, and how we can generate how people decide to trade what they need if they decide to trade in a market. So introduction, and then I have described the two very important tools which people are use in a stock market or any financial market, which is fundamental analysis and technical analysis. So fundamental analysis required higher knowledge of financial sector, and technical analysis is a bit easy to in compared to the fundamental analysis. So uh, I have used this technical analysis tools in this simulation model. Technical analysis has various indicators and oscillators and momentum indicators. So I have used the simple moving average, which is a trend indicator, to decide the trend in a market. Either the stock price go up or down, we can decide with this simple moving average, and we can calculate the moving average using this formula. The RSI is a momentum indicator that will shows if the stocks in an oversold condition or is in overbought zone. So RSI indicator we can use for the book profit. I have used as a profit booking factor in this model. So assumptions and initial parameters, I have used the $100,000 initial portfolio value, and I have used the Google and Microsoft. These are two the leading companies in IT sector. Uh, the brokerage, I have used the $5 round trip, which means if we buy 100 share and we sell that 100 share, then we have to $5 commission to the broker. Short-term capital gain, I have decided to use 10% end of the year. So whatever profit we make, we have to pay taxes on that, and we can calculate the percentage of gain or loss by using this formula. We can minus the commission and taxes from the gross profit, and we can divide that by the portfolio size and multiply with 100. So these are the factors, basic assumptions I am using for the model. I have downloaded 10-year historical data for Yahoo and Google's, and these are my trading strategies for this model. I have decided to buy, the model will decide to buy a stock when the stock close above the simple moving average, which I use the 13-day moving average. And the stop loss is a very important factor in a market. So if the stock start making loss, we have to stop somewhere. So previous day high and lows are basically a common stop loss in a market. So I have used previous day low price as a stop loss for buy trade, and RSI and 5% gain. These are the two criteria I decide to book a profit. If the stock goes in overbought zone, then we book the profit, or if we make 5%, whichever is happen first, we're going to book that profit. And for sell trade, it's a vice versa. If we stock close, if the stock close below the moving average, the model will sell the stocks, and stop loss is the previous day high, and we can book profit when the RSI shows that the stock is in oversold zone, or if we make 5%. So these are the visual display for the historical data. I have a display here like first 365 days closing price chart, and this is the simple moving average, which is 13-day I use, and RSI I use RSI parameter is 10. So this is the RSI plotting. And for Google and Microsoft, these are the portfolio output which are generated from the simulation model. If we decide to initiate only buy trade for Google or Microsoft, then like for Microsoft, this is the portfolio output. If we decide only sell trade, then this is the output. So these are the outputs for generated from the Python program, and this is a table for the analysis of result. So day one, these are the prices, and end of the 10 year, these are the prices for the stocks, and these are the this is the initial portfolio value and gross return. We pay total commission this much, and we generate almost 68% return from the investment by trading the Microsoft. If we decide to sell and buy both, and if we decide Google, we trade Google, if we decide to buy and sell both, then we can make 121% profit after 10 years. So these are the basic calculation for of the model. We can use any, we can run this simulation on any stock with the various parameters of the RSI and moving average. Like we can take 21-day moving average, or 14 days RSI, whichever we need to run the simulation. We can use this in this model. So this is my full project report, and these are the Python coding. Hope you like, sir. I try to do my best. Thank you very much.